What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we do have a lot of important things to discuss with you. We are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. And specifically in today's video, we are going to be talking about the fact that there's a good chance that we might have found a small bottom on most of these cryptos, and there's an off chance that we could start to reverse rally back up. Maybe not rally is the right word, but a small chance we might start to see movement back to the upside here, which is quite important for the success of cryptocurrency, because if we don't get any sort of volume to help us move further, we are going to see a pretty impactful drop to the downside here, which nobody wants to see happen here because we are so freaking low within most of these cryptocurrencies. But you guys can see so far that the S&P obviously managed on Friday to swing us up a little bit higher, closing us above a pretty solid support. We are kind of trending above there. Some would say it's at neckline, others would say it isn't, but we're right at that level here. So if tomorrow comes and we get a candle a little bit higher inside of this, it's very, very, very good news for cryptocurrencies. We're also seeing Bitcoin once again stagnate sideways. Typically when stock market closes on the weekends here, volume falls off and falls shy for cryptocurrency until the week starts with the S&P 500, and then we start to see that volume. So that's what we're looking for in a lot of these cryptos. But you guys can clearly see the symmetrical triangle that's forming here within Ethereum. That's beautifully outlining what exactly is going on. And I think this week, we are going to find a decision here. It ends probably the 27th. We could even be earlier, the 26th, which is literally 2 or 3 days away. And now we get that ultimate determination of what's going to happen within these markets. These usually have a bullish bias, but they obviously could also break bearish because we're at a very critical level of resistance, which we're going to talk about in a second with you guys. But with that being said, definitely make sure to check out my second channel. I dropped a video a couple of days ago. You can see here, this man will kill the US dollar. It's actually a really, really, really good video. It has a lot of interesting information about who actually controls and what backs the US dollar. A lot of people might not realize who exactly that is, and that it's actually a person. So make sure to go check that out. It's actually doing really well. It's linked down in the description below, so make sure to go check it out. But with all that being said, make sure to smash the like button, turn on post notifications, subscribe, and let's jump into today's video. Now, super quick, I just wanted to show you guys a few things. There was a comment or two comments on yesterday's video that really kind of resonated with me. You guys can see, I just want to show you. So we have this, there's a quote here that somebody commented, which I'll show in a second here, but somebody said 2009 is about the time that the US started its money printing quantitative easing policy. With the quantitative tightening policy in effect with supposedly 2 more interest rate hikes, there's a risk of a break through the bottom support of the S&P. Thank you for the regular chart analysis. Love your work. Positive but down to earth outlook. I really appreciate it, Ramon. I believe that's how you pronounce that. I'm pretty sure. But yes, he's very much so right. There's a difference. There was quantitative easing in 2009 where they were trying to relax the market and allow people to spend money. We're seeing the opposite happen now. They're tightening the economy, pulling money out of the economy to lower the amount of spending and, really push on saving by raising interest rates and stuff like that. So the fact that we are going to look at interest rate hikes, there is this possibility that there is a breakthrough. But if you're watching this, Ramon, I just want to make it a point here that just because there are 2 more interest rate hikes doesn't mean that the markets dip lower. Because if you look in 08 and 09, and even in other times prior, even when we saw interest rates move up, we also saw the stock market move up as well. It's not correlation, doesn't mean causation. And just because interest rates move up doesn't necessarily mean we see, the stock market drop lower. Sometimes they both happen at the same time. It's usually the first couple of months where we see quantitative tightening and interest rates moving higher that the markets drop, the stock market drops. And that's only because it's fear and the uncertainty, and the stock market does not like uncertainty of what's to happen in the future. But once they know, okay, we are tightening the markets because we are trying to fight off inflation and we are trying to lower the way we're spending here, businesses like the certainty, and it usually starts to see the markets move up. And I can show you an interest rate chart and compare it to the S&P later on in today's video if you have time, so just stay tuned. But the quote, I really liked what he commented. Whether it was a bot or not, I'm not sure, but it's an interesting quote, and it really resonated with me too. It says, the 3 stages of becoming wealthy. Making money is an action. pretty easy. But then it goes, keeping money is a behavior. Growing money is knowledge. Almost everyone can make money. Some can keep it, but only a few know how to grow it. And that's like, whoa, that was a real eye-opening to me because it's so true. Making money is an action. Everybody can do it. You can go get a job. You can go, work for somebody, 1099, W-2. You could do whatever and earn money. Somebody can give it to you. Keeping money is a behavioral thing that you're taught to do to learn how to keep money. Growing money is knowledge. Once you have that money, how can you grow it? So it's a very, very, very powerful quote that I thought you guys would like here. Probably going to post it on my Instagram too, which you guys should follow. Link to that is also down in the description. And I'm sorry for wasting time, but I want to dive into the video now. You can see top 10 cryptocurrencies for the most part are pretty much consolidating. They're stagnant today as expected. It's kind of a slow video because it's the weekend. It is a Sunday, and this usually happens where we see just kind of stagnant movement here. But we are allowed to look at the way these cryptos are forming, and we did manage for XRP to get us back above this major price floor here, which is hopefully going to allow us to reverse move back up. That's the goal here. That's what I'm waiting for. We're waiting to put in trades like that. I think this weekend is going to be that decision time because, and I talk about this all the time, when you look at the weekly charts, you can see we are inside. This is Ethereum here, a much bigger descending fractal here, and we are getting very close to retesting this and deciding, hey, oh, not what I wanted to do, sorry. Hey, are we going to be breaking through our top resistance here? Or are we going to be slumping through it? So we're at that point where we're retesting this major downtrend here, and we're trying to decide, hey, are we going to break downwards and fall to where this, we'd extend this line out, and we'd be falling down we can't go that low, but we'd be falling down quite literally, really low, or are we going to be breaking through it? I think more so we're probably going to see a break through it and swing to the upside here. That's what I'm betting, and I do believe that's what's going to happen here. So it's really just a waiting game. We might not blow through it, but at least trend out of it like this and start to see the uncertainty period arise for most of these cryptos. That's what I'm betting to see happen here because I believe we've pretty much fallen to the lowest levels we were at in these markets here. Same thing with Bitcoin. Bitcoin has done exactly that. We've trended outside of the downtrend here. We've pretty much fallen stagnant and are starting to trade outside the major downtrend here, which is good. We don't need a bull market, but we need us to trend out. And the fact that we're using 20K, 18.6 as a means of support, or I think it's, 19,000. I don't know why my voice is going. 19,000 as a means of support, there's a good chance we can hopefully resonate out of that, which is quite exciting here. Now, a lot of you guys are updating me that you want to see the BitYard trading video as well as Coinbase. I am still working on that. So just give me a few minutes. I'll have it up this week. But yeah, that's pretty much it. Remember, guys, BitYard is the #1 cryptocurrency leveraging exchange that I like to use here on the channel. They offer Bitcoin, Ethereum. The best part is they offer XRP, which is unlike any other cryptocurrency exchange. Not many offer XRP to trade, which is super cool. It's a crypto in, crypto out website for the most part, but you can check it out. They offer a demo account too, which is the best part. You get $100,000 in Monopoly money to test your skills, see if you have what it takes to be a real trader, or you just want to practice trade. It's definitely the best part. But even better than that, if you do sign up at the link down in the description and click Mystery Box, which is completely free to sign up, you'll actually be able to earn some free crypto. So it's super cool. Make sure to go check that out. But that's how you can leverage trade these cryptos: buy long, short, do whatever you want here. And that's pretty much it for the video. It's really just a waiting game at this point. We have to see how these markets close tomorrow, open tomorrow, and see how the stock market influences these cryptos, because they're all intertwined with each other right now. Big XRP, Ethereum, Bitcoin, the S&P 500, they're all intertwined with each other. And I'm hoping that this is the bottom here, a soft landing, and hopefully we can run up. Now, I did promise that we would show you guys the interest rates compared to the S&P 500, so I just want to pull it up here. Let's do, what is it? Interest rates. I forgot which website that I use. There's always the Fred, it's called. So we'll do Fred, which is a good chart to use. The federal funds effective rate. You can see the years that we've moved up compared to, we could do the stock market. I'm just going to move it right here. So you could see, check it out. Where is 29? So we had the interest rates moving up. Maybe it's a little different. I don't know. We're moving the interest rates up from 04 to 06. Let's do the S&P. Let's move that. I could be wrong, but I'm pretty sure that it doesn't affect it. I've done research on it. Let's go back to 04 to 06. not what I wanted to do. Maybe we'll jump to the monthly to get a better overview here. Why can you just, there we go. Okay, so 04 to 06 is right around here. So here's the perfect example. So 2004 to 2006. 2004 was right, let's do the beginning of 2004. And we ended in 2006, so this is like the end of 2006. So this is the stock market between 04 and 06. Check it out, 2004 to 2006. Stock market was bullish from 2004 to 2006. We had a bullish run. What also happened at the same time we had a bullish run? Well, interest rates went up. So we went from 1 basis point all the way up to 5.2 basis points. So this is proof that just because interest rates are rising doesn't necessarily mean that the stock market is going to dump. That's not typically what happens here, which I thought the same thing when I was researching it. But then I saw this and I was like, okay, this is different. So you can see from 04 to 2006, we went up 4.2 basis points here. But then you can see here, or this might just be the interest rate or the effective rate here. We went up 4.2. The S&P 500 went up as well with it. So it doesn't necessarily mean that because interest rates are going up and because the Feds have plans to move the interest rates higher, doesn't necessarily mean the stock market is going to drop here. And if we go, let's try another one. So 2016, we'll go here. 16 to 19, we had the rates move up. Let's go 16 to 19 now. Whereas 16, here we go again. So from 2016 to 2019, here we go. So between 2016 and 2019, we had quantitative tightening. The federal funds rate had quantitative tightening. And from 2016, we raised the federal funds effective rate from 0.34 all the way up to 2.4. So we also rose the federal funds effective rate quite a bit. And you can see what also happened with the S&P 500 was we had a bullish reaction here again. It wasn't until the end. We had January 2020. So when the pandemic hit and we dropped here, you can see that's also when we had quantitative easing. Was to reverse what was happening, but it was also happening at the same time. So very interesting, but something to consider when comparing it. So just because we have interest rates going up even more doesn't necessarily mean the stock market is going to, to drop with it. So let me know what you think. If you're watching this, let me know down in the comments below. With that being said, make sure to smash the like button, turn on post notifications, subscribe, and I'll see you in tomorrow's video. Peace.